Okay, let's talk time frames. Now, we were just talking and showing a chart from a daily perspective. Now, what does daily chart mean? It basically means if we want a daily time frame, so each candle is representing 1 day's worth of trades. That's what you've got to remember is the time frame represents what each candle or each bar represents. Or if you're using a line, the print, the final sort of dot, if you like, is the day's close. But I'm just going to stick from now on just with candlesticks and bar charts. So a daily is representing the total trade for the day. One candle, 1 day's trade. The higher the day, the lower the day, the close of the day, the open of the day. Now, that's very, very well, and it's fine if we're looking to hold a position over several weeks. We want to see really what's happened in the day. But what about if we want to go into some more detail? What about if we want to drill down a little bit more and become a bit more active with our trading? Then we can pick a different time frame. And we can pick any time frame we like. As long as our charting provider supports it, we can go from down to 1 minute all the way up to 1 month, or some even go from 1 second up to 1 year. Now, obviously, the higher the time frame, let's see if we went to a month, each candle is showing us a month worth of trade. So the high of that month, the low of that month, the close of the month, and the open of the month. So we're getting the same information but just on a broader scale. And obviously that means, as you can see here, if we're zooming out, we've got each candle representing a month. We've now got an awful lot of data in showing us a really, really long period of time. But the downside of that is we don't get to see exactly what happened during that month, or we get to see other 4 price points. So that's the pros and the cons of as you go up and down the scale. So let's move right to the end of the scale now and go to a 1 minute chart. Now, a 1 minute chart is, again, each candle is representing 1 minute of time. So when we have, let's say for example, the clock goes to 12:30, from 12:30 to 12:31, then that candle will start to be formed. So the highest point, the FTSE went in that minute. The lowest point, the FTSE went in that minute. The open, which is what the price was at 12:30 on the dot, and then the close, which is what the price was at when the time, should I say, was at 12:31 on the dot. So during that 1 minute, you're getting a visual representation of what the market did. Now, obviously, the upside of that is you're seeing far more detail. You know, if we zoomed in on this window, we've got kind of an hour's worth of information here. But we're seeing far more granular level of what's happened. But of course, if we zoom out, we're kind of stuck and we've only can really get a day's worth of info. So we don't really know what happened 5 days ago, what happened last week. So we've kind of got to find this happy medium. So let's have a look at, say, a 5 minute chart now. Now, a 5 minute chart is kind of a good middle ground. Do you know, a 1 minute chart is going to be used for your scalping, for your aggressive entries, for that kind of thing. A 5 minute is a good way of looking at the bigger picture. You see you've got a couple of days, and I've got this squashed down a bit just for this video. If you've got it on a bigger screen on your desktop or even on your laptop, you're going to be able to get sort of 3 or 4 a day's worth of trade in there, so you can kind of start to see exactly where we are relative to yesterday. So you get a little bit of the best of both worlds. You get that granular level of seeing, you know, what the high and the low for each of those 5 minute periods was, the open and the close, but you also get to see a kind of a bit of a pattern. And if we flick over to a line chart now as well, you know, we can see that it becomes a little bit easier to see that on a candle. The shorter time frame we are, it looks very, very similar. Another popular time frame to look at is the 15 minute. Now, 15 minute, again, we're going a little bit further out. We're not quite as high as a daily, but we're getting more information in, but we're still seeing the shape of the trade intraday. We're still seeing exactly kind of what happened during the day. And if we look at, you know, just the example that we have on the screen here, you know, we can see in this 15 minute chart that this was our low, this was our high, this was kind of the range we went, this is where we closed, this is where we opened, and you can get a visual idea of ultimately what the daily chart is even going to look at. The daily chart is going to look kind of like that, isn't it? We're going to have, there's our open, there's our close, not very broad, and then not much of a wick either side of it. In fact, it's probably going to even look even narrower than that, isn't it, if you look at it, the scheme of it. So you can visualize what the daily is going to look like, but the 15 is giving you still a broad overview. Now, another popular time frame is the 1 hour. 1 hour, again, going even further out, but giving us more, you know, we get a whole month worth of information. You get a whole month worth of information in, but we can still see the highs and the lows. We can see your key levels, and we'll talk about support and resistance in a moment and what they mean, how it works, and everything. But we can still get a visual representation. So I could go on forever here. Like I say, 2 hour, 4 hour, whatever. And another thing is actually very popular is a 4 hour chart because you're getting, again, more information. But the point is, you use the time frame that suits your goal as a trader. If you are trying to trade on a very short-term basis and you're trying to make a profit over the next kind of 5, 10, 15 minutes, you're not going to use a 4 hour chart to make your decisions from. Now, you may well use a 4 hour chart to look at the bigger picture so that you're aligned with the bigger picture. And we'll go into detail on that in a second. But to make your actual trading decision, you're going to want to use a 1 minute, a 3 minute, a 5 minute. Something small, something that's going to represent, really visualize what you're trying to achieve. So when we're picking a time frame, we want to think of, number one, what our objective is, what our time frame objective is. If we're holding for a long time frame, we're going to go on a higher time frame. If we're holding for a short time frame, we're going to go on a short time frame. Number two, we want to be able to see the bigger picture as well. And number three, we want to make sure that we have all the information that we need to make the trade. Now, what we don't need is, if we're scalping on a 1 minute, we don't really need to go back and see what happened in 1987. It is irrelevant. It makes no difference whatsoever. So we've kind of got the window that we need to look at, and understanding that we either spread it out further the higher time frame we are, or bring it in depending on the time frame we're trading.